Now let's take a look at the bigger picture. We have Larry Tentarelli with us, Chief Technical Strategist, Blue Chip Daily Trend Report. Thank you for being here.
Nicole, thank you for having me.
I mean, look at today's chart with the back and forth action. Pretty amazing when you look at that up on the big board. Much of what we've been seeing, right?
Sure. Very choppy, but we've been higher recently, which is good after a pretty big drawdown.
Some of your thoughts on why this is happening. I mean, do you expect this to continue happening when you're looking at the technicals?
At least through April 2nd, I think most of the volatility is tariff related, and not only the uncertainty from tariffs, but also do companies slow down hiring? Does the consumer slow down? So I think until April 2nd, we still have those wide trading ranges.
Do you think on April 2nd we could see a big sell-off, or not necessarily, because now we're starting to hear the president say things like we're more flexible on tariffs, and maybe I feel like it's going to be a little more pieced out, but we know April 2nd is sort of the day, right?
I think April 2nd more likely could be bullish, because generally the markets don't like uncertainty because we can't forecast anything. Once we get some type of certainty and the markets know exactly what the numbers are, then I think that you'll see some relief.
So you'll have the numbers, and that actually brings, that's true, that's how the market works.
Right.
In the meantime, the sell-off that we've seen over the past month or so, some of your thoughts on what's been happening. When do you look at the technical analysis and say this is time to get in or not get in? I mean, what are you looking at? You said you like to follow technicals really closely.
Sure. So what happened with the S&P 500 and the NASDAQ 100, they both rolled over pretty quickly. They both broke below their 200-day moving averages, which is more cautionary. Now they've had a bounce. The S&P 500 is back over the 200-day, but we're right in that middle range right now. So the S&P came down from 6,140 to 5,500, about a 10% drawdown. It's bounced about 4.7%. So we're right in the middle zone of that pullback. The big number for me on the S&P 500 is 5,800. We're just below that right now. If we close, you want to see a close above that? If we can get back over that, that takes some pressure off the S&P.
See, some people are worried that as we go back up, we face a death cross. I mean, it's just not going to be an easy path up back to, I guess, highs, even though they're not that far away.
I don't think it's going to be an easy path either. There was a lot of technical damage to these charts. It's going to take some time, I think, to build some bases before we can move higher. There are certain parts of the market and certain stocks that are acting better than the index, but I do think we're in a wait and see mode right now, and a lot's going to be based on Q1 earnings, which are just around the corner.
Understood. So now you're looking at different areas, right? You mentioned Berkshire Hathaway, new highs. You're looking at aerospace and defense, a name like Raytheon. You have Spotify, Netflix, DoorDash. Why are these names in your notes?
So I focus on strong stocks in strong sectors, and I look for uptrends. So all of these stocks are either near the highs or held up much better than the market. So Berkshire Hathaway, recent new highs. Raytheon, recent new highs. Stock like Spotify didn't break below the 100-day moving average on this recent pullback. Neither did Palantir. So what I look for is what stocks have held up the best when the market is unwinding. That shows me where the strength is, and those are generally going to be the leaders on the rebound.
Palantir? I thought Palantir was really beaten down. I don't have the chart up, but that one so these names, you think the uptrend holds?
Yes.
Is the point. Because you had Netflix and DoorDash on there too.
Yeah, so Palantir held the 100-day moving average. It pulled back quite a bit because it had a really big run. I think it pulled back from 125 to the mid-70s, but it was the only major AI stock that didn't break below the 200-day moving average. So it's still a relative leader.
Yeah, you like that one.
Yeah.
And in the aerospace and defense story, there is some concern that Doge is cutting back on everything. But, you know, defense, we always need military, right?
Sure.
So it's a very sort of, I guess, you know, they can cut back what they want, but they also invest in our military. Raytheon, you think, has upside potential?
I do. What's interesting, and I had the same concerns because I saw the defense stocks, they pulled back sharply after the election. Raytheon pulled back to the 200-day moving average, but it's had a strong bounce since then. So generally what I do is even when I have an opinion, I look at what the market thinks, and the market's taken Raytheon right near the high, so that tells me that there's confidence in defense.
Right, that's good. You talk about the triple Qs and going below the 200-day moving average. Do you load up on the triple Qs now? I mean, they've been beaten down. Is it now the time to switch your 401k out of bonds and into tech or something because it's been beaten down?
I wouldn't say load up yet. I think triple Q, it still has to prove prove itself. So I'm a technician. When stocks break below that 200-day moving average, to me it's a very cautionary sign. And that's a trend filter that's used by a lot of institutions. I wouldn't say load up. I think that we can do some test buying right here. And then if the index continues higher, we can always add. But I wouldn't go all in on anything just yet.
Right, understood. I mean, when you think about what's going on with the presidency right now, you have a new administration. Often we'll see a recession with a new administration. When the recessions come, it's often in the first year of the president's new role, right?
Right.
Even though he's not a new president. There's many people who don't even see a recession and just think he's front-loading the pain now and get things done.
Right.
What do you think about a recession or just front-loading some ideas and things can get better in the back half or in 2026?
I think it's a possibility. I would put it maybe 25 to 30%. So I look at bond yields, and bond yields came down quite a bit from 480 to about 425.
Yeah.
But bond yields haven't completely broken down, and they've actually been higher over the past 2 days. So there's some concern. We see consumer confidence came in pretty low right now. Some of the other economic data points have come in a little bit lower. So that's not my base case view, but I do want to pay attention to it based on the sharp drop in bond yields.
Right, that's amazing. So you said 25, 30% likelihood?
Probably.
So so more in this just stay where we are range? Is that really what you're thinking?
Yeah, it's not my base case, but here's a couple things. They've come out and they've said that they want to cut government spending.
Right.
There's been a lot of job cuts with some government jobs, and sometimes to get that inflation down, they do have to make some changes. So it's not my, a firm prediction whatsoever, but I do think it's something we need to keep in the back of our minds.
I did want to go to Europe, but just as I mentioned, the recession in the first year of the term of the presidency,
right.
You also have here how April and May are winners when there's a new president.
Yes.
Right?
Year one of the presidential cycle. Over the past 74 years, April and May are higher 66% of the time. So we've got some bullish seasonals right now. The S&P 500 recently hit a sub-30 daily RSI, which is technically oversold. So I think we've got some positive tailwinds right now. We still have to get through earnings. The market's still very nervous. It's hyper-focused on any data point that comes in. But I do want to give the benefit of the doubt to the upside.
Yeah, that's interesting there. So you're watching 5,800 on the S&P. You noted that's the retracement, 50% retracement from the highs.
Right.
61.47. You were looking at that. Now let's turn to Europe.
Yes.
Where we've seen Europe sort of wowing Wall Street. People didn't expect it after the recession they had.
Yes.
You still think there's some room to go. How so? How would you go about that?
I do. I'm bullish on Europe. So the first thing is they're breaking out into uptrends. So the FEC, the Euro Stocks 50 ETF, is breaking out to multi-decade highs. Germany's been breaking out. The DAX is making new highs. So the first thing that I look for is what markets are breaking out. So Europe's breaking out. Germany's very strong. So I have some allocation there, and I could add if it keeps working.
Right. And what about how people are feeling? Because we're watching soft data versus hard data, and often it's about sentiment. Could that be the contrarian indicator? Is that the real indicator? Because if they're feeling pretty crummy here, as we see, in confidence, but at the same time, they're still spending.
Sure. Yeah, it's tough to say because the consumer confidence numbers, they've come in a little bit lower. It looks like retail spending is still holding up. And I look at the discretionary stocks to see how they're performing. And some of the retailers have pulled back. But I always want to give the benefit of the doubt to the current trend until the news proves us wrong.
All right. Larry Tentarelli, Chief Technical Strategist, Blue Chip Daily Trend Report. Thank you so much for being here. Good to see you
Nicole,
in person.
Thank you so much
for coming to the New York Stock Exchange to be with us. Thank you.
Welcome to Blue Chip Daily, one of the industry's premier sources for high-level daily technical and trend analysis. Blue Chip Daily is ideal for both investors and traders of all time frames who want to be on the right side of major market moves and trends. We focus on over 750 large cap stocks, all major stock indices, over 70 exchange-traded funds, bonds, oil, gold, and Bitcoin. Sign up now for Blue Chip Daily, and you will get access to real-time portfolio alerts, premium Twitter page with intraday alerts and commentary, the chart of the day with best idea, daily video and report, and much more. Claim 30-day trial at www.bluechipdaily.com. Subscribe to the Blue Chip Daily YouTube channel for more technical and trend analysis videos and other content.